Hi and welcome to the Market Alert for Tuesday 31st of May 2022. As economic data crashes, Biden invites Powell to the Oval Office. Did the president finally realise that markets crash, free-falling real estate and recession poll worse than hyperinflation? I don't know, it's taken a moment or two for the penny to drop, hasn't it? And Brent crude tops $122 a barrel after EU agrees on partial ban of Russian oil. But they'll be soon backtracking on that one. As I said, watch the 122 yesterday, and the market went to it during yesterday's session. German inflation hit 60-year high, worse to come, says Allianz. Inflation is an enormous economic risk. It certainly is, but Powell still thinks it's transitory. And in Pakistan, on the verge of inflationary collapse, pleads for larger IMF bailout. Well, good luck with that one as well, from the International Mafia Fund. Yeah, it's a mess, isn't it? But the markets continue to move up. We'll come to that in just a second. Today's economic news: CB confidence out at 3 p.m. for the US. But as I just said, the market continues to move higher, and it looks like we're set to move higher this morning as well. As you can see here, the Dow yesterday, electronic only because it was Memorial Day, very tiny range, trading up to the 78% retracement, but managing to leapfrog over the 50 EMA there. But at the moment, it's still continuing to move to the upside. If we look at the daily chart, you'll see why, because we've traded down to yesterday's low. We found demand, we're oversold, and the market is moving back to the upside. Now, I'd expect it to head at least back to where the high is before there's any sign of any weakness coming into this market. Like I say, it doesn't matter about all of the fundamentals that you've just seen. The market is still heading higher at this time. The same for the German DAX. In the daily chart here, you can see that again we're at 78% retracement, very narrow range yesterday, very quiet because the US was closed. We're actually seeing a drop off in the volume here as well, which is quite interesting. This market is being marked up as opposed to any momentum moving it to the upside there. 89% retracement is going to be key for this market, but again, if we look at the 30-minute chart, you will see yesterday the market in a bit of a range, coming back 78% and then another 78%. Overnight, the market has gapped lower and then gapped higher. Both sides are filled. We've got the close. Any weakness, watch the low, because the market could find support. It'll also find support in these green lines here as well, where you can see that the market has held already. Market needs to stay above the DP if it's to remain bullish. We're not that far off yesterday's high. That will be a very interesting area to go to find any potential weakness for a short. We'll have to wait and see what happens when we get the futures opening at 7 a.m. In the 5-minute chart, it was nice to trade yesterday. We started off with the market continuing its move higher in the futures markets. We became oversold with divergence, crossover, and then we switched to red. We traded back down to the BRN, where the market was oversold with divergence, crossover, and then moved back to the upside. We got a full 100% retracement there when we were oversold with divergence. The market then came back down 89%, where it was oversold with divergence, crossover, moved back up 89%, where we already had the market overbought, moved just slightly higher, and we've got the crossover here. Market from here to here, though, is, let me just redraw that in this area here. From here back up to here is 89%, and we've got the momentum already starting to move lower. The market follows, become oversold, we get the crossover, and then we see the market move back another 78% before, and again overbought, divergence, before the market moves back to the downside. So a lovely pattern there yesterday for the DAX. The only problem is it was in very, very narrow range. There's not that many points in each of these moves. That's the only problem, unless you actually go down to the 1-minute chart and time the trade accordingly. And that's something that I'm currently looking at to find ways of getting into this a bit quicker in whatever time frame you're actually looking at. We're oversold here as well. Again, we've got the crossover, and then we move up with the Dow in the afternoon, and that's the first bar in the Dow. We sold off with the Dow first, and then we got down to here at 1440, and then moved back to the upside there. In the Japanese yen, you can see that fairly quietish. Got the resistance at 161, which comes back to here, the 20 bar moving average. We're above the averages at the moment, and the 5's actually crossed as well. But there just doesn't seem to be a lot of interest in moving this market in the daily chart. However, in the 30-minute charts, again, we're coming off a situation where the market was oversold with divergence. We see the volume coming in, and the market was just moved to the upside. Around 80 points there, and then overnight the market has just traded to the downside as we got into more or less overbought territory. Not doing a lot at all, is it? The pound, though, had a bit of a down day yesterday, overnight it's had a bit of a down move. I'll show you that in a second. So yesterday moving up once again to that resistance at 126.349. And also 50% retracement. And in the 30-minute chart, you can see yesterday we went from being oversold, we were overbought to begin with, market down to BRN, demand, crossover, market back, become overbought. We got a pull back to the DP, again very tiny move. This is about 25 points, and then back up. But overnight, the pound has dropped 50 points there, but it's currently picking up some support at the previous day's low, which all markets like to do this if they can. Also the 200 MA there as well. And then finally, in the silver market, we can see yesterday, as I've said, this is still looking very weak to me. The market down yesterday, just holding at the 20 bar moving average on the overnight. We are overbought with some divergence. We either need to drive through this with some serious buying, which I doubt very much we're going to get. I'm going to draw in the downside targets for this because I think we're going to come back down and test this 20 area, 2066. As the market won't move until it's had a really good violent shakeout like it did in March 2020. You've got to get rid of the weak longs first before you can move the market up. I mean, fundamentally, it should be screaming through $50, but we know what's going on at this time, don't we? But we must be getting closer to the day where it's going to be allowed to rip higher. And in the 30-minute chart, as I said yesterday, they were going to move it lower, and they did. They took it through the previous day's low. We got to it, and then the market has gone lower overnight, but now just finding a bit of support. Let's see how long it finds the support for in the 30-minute chart, because it's only got until 1 p.m. when the London fix comes in before it's sent back down, as we see every time at 1 p.m. You just go back in the chart and have a look. Apart from one day, I think, in the last 10 days, but every one has moved 50 cents lower at the open. The dollar, let's have a look at the daily chart of the dollar. Also down, so silver and the dollar down, which is absolutely absurd. So as the dollar's come down, silver should have gone back up to at least $27, and it hasn't. So again, you can see how the manipulation of this market is continuing, and the dollar finding support at the 62% retracement, which is not on the chart there. I've just removed it, but at the 50 EMA, same area, and oversold at the moment. And then, as we discussed in the headlines, crude oil through 122 on the cash market, so 120, 165 on ETX's platform. They're your upside targets, and as I've said before, we've talked about the diesel shortages, we've talked about fuel prices going into the summer. People are going to get absolutely screwed travelling around the country this summer because they're going to keep moving this up. The agenda is to create the hyperinflation to try and inflate the debt away. That's their last chance saloon in order to do this, and of course as a consequence of that we all suffer, and are going to suffer very much so as well. And notice yesterday they're talking of power cuts now. in the autumn as well. Yeah, great, isn't it? Anyway, on that cheery note, let's see what happens during today's session, and keep an eye on those previous highs for the Dow and the DAX for yesterday. That's where there could be some potential weakness as the markets have moved up considerably over the last 6 or 7 days. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.